Hello, I'm Jackie Brooks. I'm a senior manager out of the Tulsa, Oklahoma outsourced managed services office. Our other presenter today is Natalie Miller. She is also a senior manager out of our Omaha, Nebraska office. We both have years of nonprofit auditing experience moving into kind of the actual hands-on accounting role, serving our nonprofit clients, helping them get their systems set up and flowing, and doing a lot of advisory and controller type work. So a little bit of background on us. This is nonprofit budgeting and financials. And we will head into our agenda. So we're first going to kind of go over our strategies for budgeting, kind of taking a look at how we can go about starting that process and our thinking and our goals and all of that. And then next we can kind of just give a quick overview of the tools that some of you may already be using, or others that may be available to you and you didn't know it. Or tools that maybe you would like to graduate to eventually. And then we are going to talk about analytics. You know, we'll focus on budgeting, but then using what we've learned from budgeting and the data and how to apply it from an analytical perspective. And then next, we will talk about some tools we can use to monitor and track key performance indicators. And then we will conclude. And we actually are going to be starting off with our first polling question. So hopefully everybody's on. Okay, so what do you see when you see a budget? Are you somebody that just sees a bunch of numbers and you're kind of glazing over it? Do you see an action plan because you're that person? Scribbles by a 3-year-old because it means nothing to you? Or were you maybe the person who actually developed the budget and it is just beautiful and a piece of art? So let us know what you see.
All right, everyone, our first polling question is up. If you are here for CPE, please make sure you are answering these polling questions. Make sure your slides box is maximized. You will make your selection right on the screen, and then you'll scroll down just a bit and you'll hit submit. Make sure after you answer the question, you are submitting it. And we'll keep it up for just a few more moments and then we will continue.
For the person preparing it, it always feels like a piece of art when you're done. You may hate it, but it's still a piece of art because you put so much work into it.
It's a piece of art, and then you give it to somebody else and they're like, this is just a bunch of numbers and it means nothing to you.
You could take that so personally.
Yeah, it hurts. Ouch.
Okay, we are ready for results.
Ooh.
Good answers.
An action plan. All right, well then you're definitely in the right place here, and hopefully we'll enjoy these next slides. And the rest of you, whoever you are, who sees a scribble by a 3-year-old, that is insulting. And hopefully you will understand the pain that goes into and the importance that goes into a budget. So
I feel like a lot of board members would either say the scribbles or a bunch of numbers.
Well, then we need to have a talk with the board members.
I know.
Oh, but hey, you know, that leads us to one of my very favorite quotes, and I think I've used it before, but I think it just encompasses kind of that polling question. It's clearly a budget. It's got a lot of numbers in it, and that was George W. Bush. So good job in managing budgeting there. And I think that this is just a great quote to kind of encompass maybe non-accounting professionals. They see a budget and it's just a bunch of numbers. They just want to see what's at the bottom line. Is it red? Is it black? Is it green? Where are we? And then maybe sometimes even accounting personnel. So hopefully this isn't you, but I think it does happen where it's that time of year again. Oh, you got to get a budget together. So you throw it together and it's just a bunch of numbers and you just need to please somebody. But hopefully after today, we can kind of see this a little bit differently. First, let's go over some budgeting best practices. And this will kind of just keep this in mind as we're talking about the rest of the slides. This first one, standardizing your data and processes. This is actually going to be a best practice just overall in your accounting systems, in your accounting reporting, in your reporting. This is a very important thing to have, and it's pretty crucial with the end product of budgeting. So standardizing processes, that means making your methods and processes consistent throughout your organization. So to be able to do this effectively, you take out manual methods and you replace them with more automated tools to streamline processes. Manual errors, they're going to create inefficient budgeting. It creates inefficient and usually inaccurate reporting. So right now, think about the tools you're using. Are you getting the most out of them? Are there opportunities to automate or add on features that maybe you didn't realize you needed until now? The next best practice for budgeting is thinking about your drivers. What's driving your organization? In just a couple simple examples. So if you're a donation-based organization, a driver would be number of donors. So this could be broken down into new, lapsed, and recurring donors. You can evaluate what comes in for each of those categories and then actually compare the cost to gain them or even retain existing donors and just kind of see how that aligns with your overall strategy. Is it costing you a lot? Are we, the way that we're bringing in donors, maybe there's a more effective way. So thinking about that. And then also, so that's from the donor perspective, but thinking about it from who you're serving and your drivers there. So is it, who are you serving? Your patrons, and what's driving those costs? And so I think focusing on that's also going to help you market to specific donors and even grant funding agencies, just based off of gathering that data. The next best practice is, we always want to look back and evaluate our past performance. What worked well, what didn't work? Are we looking back, realizing we've been struggling in a certain area, but we continue to do it? Now's the time to realize what's working and what's not and make a change. And what better way to do it than just to include it in your plan and in your budget. I think this next one's very important, involving department or program leaders in the budget. Or even other people who are driving and operating fundraising efforts too. So it may not just be those leaders, it could be other people, but when you include them on setting budgets and plans, that helps them stay accountable. And it also helps provide kind of another perspective as it relates to your operations and your objectives. It helps you see things that maybe you haven't seen before, and it brings everybody together. Okay, and then also creating smaller budgets. So this is kind of the next step. If you are new to budgeting, this is probably not for you, but this is kind of for an advanced user. The next step is to actually break it down, to create smaller budgets per department, per program, per fundraiser. So that is a good one for more advanced budgeting. And also keep an eye on your budget frequently, review it frequently. We may find when you're looking at your budget to actuals, you're continuing to have to explain something away because something has changed, plans have changed. Maybe that calls for a mid-year budget update where, you know, we're changing our plans, we're updating our budget. That's a great practice to have. Sometimes it's not needed, but to continually be evaluating it, looking at it and seeing if things need to change and plans need to change. And the last one, model out different scenarios when you're budgeting. Figure out what unique challenges you have and identify what kind of scenarios kind of go with those. And actually when you do that, say you're going on throughout the year and one of those scenarios actually happens, well, you have budgeted for that scenario. So that's readily available to you. Okay, so this is where I feel like the main point I'm trying to make is budgeting based off of strategy and kind of realizing that your budget doesn't have to balance. That's not what it's for. You know, all of you who said you see an action plan, well, yes, this is just for you. You are looking at it from a strategy, goal perspective. And so kind of looking at it from that way, some questions to ask is, you know, what do we want and what do we need? And I gave a few examples just as examples and how you can kind of think through it. But if your goal or your need is to pay down debt, well, part of your financial strategy would probably need to be to increase revenues over time. You're going to have to carry a larger bottom line over the next several years. So your goals and objectives and your budget should align with that. So you wouldn't want to break even. You're going to want a surplus to be able to pay down that debt. If your financial goal is to invest in infrastructure or specific programs or adding programs, you know, this year it may be acceptable to have a deficit budget for that year. I do think, and Natalie will kind of go into it later, but this is also where forecasting comes into play. You know, where are we going to be 2, 3, 4, 5 years down the road? Maybe if we continue to have to lose money over the next few years, maybe we shouldn't be investing in infrastructure or specific programs. So, you know, we're not just looking at the right now, we're looking several years down the road. So your budget is not always just this year. It's a plan. Yes, we're going to look at this year, but we're also looking forward facing. And then, you know, you may just be trying to survive. So yeah, we're going to have to break even and align our budget that way. And then also, you know, part of your strategy-based budgeting is it's mission focused. It's thinking about who you're serving. What are my goals going to be to serve them? And being specific. Once you identify all of your goals, you know, am I wanting to reduce homelessness in a certain area by 5%? Do I need to feed 500 children, you know, over a certain number of time? Do I need to provide medical supplies to children? You've got to identify those goals. It's not just throwing a bunch of numbers in a department. You've got to know what you're going to do. And then you have to determine what actions you're going to take for those goals. So once we've figured out the actions that we need to take, it kind of leads us into, all right, we've got our actions. What resources do we have? What resources do we need to accomplish those things? So, you know, we're kind of looking at it from resources from strategy down, not from, you know, the bottom line up. So, you know, how much should go to operations? How much should go to programs? How much should go to investing in new technology or actually just some new innovations, and how much to fundraising efforts? So do we need new resources? Maybe once we dig deeper into figuring out the resources that we need, we may realize that we don't have enough to put our goals into action, and new resources are needed. And maybe we do have them and we just didn't even know it. So just a shift in resources may be needed where certain areas could actually share services. I've actually seen clients realize, oh my gosh, I've got a department or a program that does really good in this area. There's no point in both of them doing the same thing. Let's centralize that process, take certain burdens off the other area so that we can free up capacity and further reach our goals. And with that said, you know, do you have certain programs or activities that could actually be combined together while still serving those separate functions? For example, so I have a client who decided to combine one of its program activities with actually a fundraising activity. So certain facilities and other resources were shared at the same time, and that cut cost almost in half. So kind of be creative, like where can we combine, where can we share across our programs? And then we were talking about looking backwards. Are we using resources that we don't even need? Should some actually be eliminated? Are we doing the same thing year after year just because we've always done it that way and you haven't really evaluated whether those processes really add value or are even needed anymore? I feel like when we're strategy focused and mission focused, thinking about, will this add value? Is this adding value is going to be pretty key. Because if it doesn't, it's not needed and it needs to go away. So just kind of overall, like when we're thinking about our resources and our goals and our actions, does that all support our mission and our strategy? And I know this isn't like a specific budgeting tool, but the way thinking like this and planning like this is actually going to create a very successful plan and a budget that can be used year after year. I'm not going to go into too much on these slides. This is just kind of a way that you can look at where your goals and objectives are coming from and the ideas and who's actually kind of developing the budget. So in bottom-up budgeting, and this assumes that your department or program leaders are involved, that they know the cost within their areas. If you are the accountant and you're the one who is always doing the budget and trying to figure this all out, you may need to be the one who's coordinating all of these efforts, coordinating the discussions along the lines of strategy, objectives, goals. And then if we're taking a bottom-up budgeting approach, it's getting all those key people together from the bottom who are going to say, you know, these are the programs or projects that we have, and these are our goals. And so then, you know, as an accountant, you can work with each one and talk about, okay, well, what are these costs? What do we need? Who are the people in there? Come up with the cost, the labor, figure out how much rent and utilities are allocated to each one, and build a budget from the bottom up. And so then management takes a review, make sure that aligns with the overall goal. And management in this sense could be the executive director, the finance committee, the board, and then that the entity-wide budget is set there. And then the next one would be going from the top down. Excuse me, where our executive director, our finance committee, or our board is the one saying, this is what we want. This is what you guys are going to do. And then obviously as an accountant, you would have to then spread that around to the department leaders and program leaders and create budgets based off of those. So instead of the individual department leaders deciding what the strategies are and the goals and the costs and all of that, management is saying, this is what I want you to do. You have X amount of dollars to do it. Now you can create your individual budgets along those lines. So just kind of a different way of, I think the overall approach should definitely be on your strategies and goals. But I guess looking at it this way, it's who's setting those strategies and goals, who's involved, that kind of could go from top up or top down to bottom up. And so with that, the idea of budgeting by program. So we've got our entity-wide budget and talking about department leaders and having responsibilities over them. That's kind of setting that budget by program and using whichever approach that you decide. But this just kind of reiterates the importance of those program directors and anybody that's involved in those processes or in those operations to be involved in the budgeting process. And then once we get to a point where we're looking at budgeting by program, we may look at it and say, this program, it's not serving our original mission. It's not working. And there may be a time where we either need to pause or eliminate a program, or maybe ideas come forth where, you can actually build upon that. We talked about combining resources. Maybe it's a combined program, but, and then thinking
Jackie,
about—
I want to chime in on that one if you don't mind.
Sure.
So if you haven't been budgeting by program before, it can be a challenge because a lot of the time your department managers maybe haven't seen their specific numbers. And so it can be hard for them to give you a lot of input going back. So I've got a client who has not done it by department before. And what we're going to do this coming fiscal year, actually the one they're in right now, is we're going to give those department managers their monthly financial statements so that they can start to understand what's in them. And that'll give them a lot more information for feedback going into next year's budget. So that's something that you can do if you haven't done it before, but you would like to.
Okay, and there are a couple of comments. Oh, we've got another quote. Plans are nothing. Planning is everything. That's right. Oh. Okay.
Then we also had a question about operational versus non-operational expenses. And we have some slides on how to allocate coming up in a little bit. So we'll touch on those too.
Yeah. And then I just kind of want to throw in there too, with all of this, and I feel like with a successful budget, and especially if we're talking about operational, non-operational programs, grants, this is actually all going to come down to what's your accounting system? How are you tracking things? What tools are you using? Are you able to separate out your expenses by program, being able to identify it and it all being in your data set? Are you having to track it separately because your accounting system doesn't do that? Ideally, you should be able to have data in your accounting system that says, this is for this grant, this is for this program, or this is, an indirect expense, and when the time comes, it needs to be allocated. However, so, we can talk all day about doing this or that with your budgets, but you really do need to consider the data that's coming in and how it's managed in your accounting system, because that's what's going to really make the difference between successful financial reporting and successful budgeting. Okay, and this is just a real quick slide, nothing to go over other than just thinking about your budget on a day-to-day basis, just kind of like I mentioned, as your transactions are coming in, if you're able to identify them from a program standpoint versus, you know, are we just tracking from an entity-wide because we can't do program or whatever. And then with grants, like I mentioned, you know, with a lot of grants, you've submitted a budget for that grant and you've got to be able to track and spend against that budget. Are you able to, in your system or in Excel, however you want to do that, are you able to effectively track those things and compare it, either within your accounting system or outside of it? Is your data supporting that? And then, you know, sometimes there's challenges where you have multiple grants that support one program. So I will say that Eide Bailey, we have experience in all of that and helping clients kind of navigate their accounting systems. We like to call ourselves, well, I don't know if Natalie likes to call herself this, but plumbers of your accounting. So we see your processes and we're going to try and plumb the most efficient way for your accounting to go through. So anyways, we are plumbers in the accounting world and we will make sure everything flows.
That's new to me, but I like it.
Okay. Okay. And that's kind of, you know, in thinking about tracking, that also goes with contributions. If they're restricted to a specific program, are we able to track that? And it all flows through to budgeting. You know, when we're developing a budget, we are going to look and see like what was the funding we got for this program, and to be able to see it and to be able to budget, you know, for the next year or the future years for those specific things. If we're not tracking those and we have no idea, it's really hard to build a budget, an accurate budget with nothing. And just a slide here to just remind yourself, where are you looking? Are you looking in the rear view mirror? Are you looking backwards and you're starting to miss all these opportunities, whether that's with how you're budgeting or with the tools that you're using for forecasting or tracking your performance indicators? So just where are you looking? Hopefully you're looking forward so you don't crash. And that leads us into our next polling question. Who helps prepare your budget? Who's involved? The board of directors, management, so your executive director, CFO, COO, program directors, all of the above, or no one? It's just the accountant and you're on your own and everybody's going to get mad at you.
Participants who are here for CPE, make sure you are answering these polling questions. If you are here for CPE, make sure your slides box is maximized. You will click on your answer right on the screen and then make sure you hit submit after you make your selection. You'll make your selection on the screen. You'll scroll down just a bit and hit submit. Make sure you are submitting your answers, and we'll leave this up for just a bit and then we will continue. And there is a Q&A question in there if you want to get one of those.
Yep. So it says, for a growing nonprofit with multiple programs, any suggestions for how to stay organized? We have lots of ideas. I think the easiest one is to manage your AP process. So QuickBooks Online, Bill.com. I would recommend incorporating either project tracking or class tracking to keep track of, well, for programs, I would say class tracking. But so you would be assigning your account and your class, and you should have a class for each major program. And what I see often is that all of that tracking is there, but when it gets to the executive director, they may just be looking at the invoice and the amount and saying, yes, go ahead and pay it. But it's really, really important that program managers and the executive director are reviewing for where it's getting categorized as well, so that things end up where they need to be.
So I think some people must have us on mute and are doing other things because not everybody has answered the question.
Oh, we're over 90 now. We're getting there.
All right, and we are good for results. There we go.
Okay. All right. So the majority, more than half, we've got the board of directors, management, and program directors all involved. That's awesome. So hopefully with all of that, you guys, your reporting and all of that flows with your budgeting. Let's see. And then no one, 4%. Well,
and one more comment before we switch to the tools. I've seen a lot where the budgets forget to factor in what we still had restricted for programs from last year. So we may see a program budget that has $100,000 in expenses, and so maybe they're budgeting $100,000 in revenue. Well, do we have $100,000 that needs to be released from last year's temp restricted funds? Just make sure that you're factoring that in, and understanding what your overhead costs are and how you're going to fundraise for those. So it's easier to get program grants than it is for operating grants, but we've got to make sure that we're factoring in how are we going to cover our overhead expenses. Do we have funding for that unrestricted funding, or can we incorporate some sort of indirect piece into those programmatic grants? So just things to think about as you're planning for the next year.
Absolutely. I mean, there's just so much with nonprofits to plan and track. You may have all of these net assets and this cash and realize, well, wait, I can't even use it to support just our admin, So, yeah, I love that, Natalie. Good job. Okay, and so just kind of go over a few what's out there, what you can use if you're not using anything. Obviously, there's QuickBooks Online. In Plus or Advanced, the budgeting is built into that software, and you can start from scratch, or you can use an easy fill method to start out by, like, using prior year data. It lets you do that, and I think this slide kind of shows you that piece. You can use actuals from the prior year, and it will pre-fill, and then you can manage it based off of that. Another thing with QuickBooks too, if you're using it or if you plan to, you can budget by program. You can see, I guess, I don't know if you can see my mouse, but if you see in that little section where it says subdivided by, you have several options to be able to create even smaller budgets in there, and you can run reports based off of those too. Natalie, do you have anything to add to that? No?
Just that it's very basic. So
yes.
It is there and it is helpful, but I would strongly recommend that you do something more robust to generate the numbers that end up in here.
Yeah. Obviously, you would probably, if this is your end piece where you're putting your budget in, hopefully in Excel or whatever you're using, you've already gone through all of your action plans and sat down with your departments and identified each cost and what it's going to take. And this is where that end product would be. And then here's Excel, just a simple budgeting option. I'm sure the majority of people might be using this. It's very manual, but it gives similar results. Obviously, with formulas, manual entries can cause some discrepancies, so you need to be on the lookout for that. But just kind of quick, simple budget to actual, over, under, percentage, what that would look like there. And here's what it would look like if you did it from a project or program standpoint in Excel. You can divide it out that way. Oops, I already did that one. Another budgeting tool can be found in NetSuite. And here you can do it by department. There's a lot of levels that you can go down and budget by there. Intact also has a budgeting module. And then there's Giraffe. So this is going to be a lot more robust. As you can see here, you're able to identify drivers. We talked about drivers. That is a best practice. Here you can set those drivers up with inputs and develop your budget based off of that, as well as the ability to forecast and a lot of other cool stuff. And Natalie will get to that at some point. We have another polling question. What is your biggest budgeting challenge? I have not enough staff, managerial or leadership input, lack of quality data, limited tools, or I have no issues. I should be teaching this webinar. And maybe those people, maybe that'll be 50%, since I feel like everybody's already on board. They must have watched this webinar before and they took notes and
All right, I'm going to hit a couple of these Q&As while we wait for you guys to submit your answers. So one of them is, what is a driver? And those are non-financial operational, they're non-financial and operational indicators, different things that you can track that basically drive where your revenue and expense are heading. So a super easy example of that is headcount, right? Our headcount is going to impact both our revenue because we might be able to provide more services, and our expenses because we have to pay for them. Another one was, how do you keep things straight between grant budgeting and financial statement budgeting? And how do you track things internally between the grants and the financial statements? You should be using something within your accounting software. So if you're using QuickBooks, you can use projects or you can use classes. Projects are great if you have a one-to-one relationship, one grantor to one set of expenses that are going to be assigned there, or you can use subclasses. Maybe you have a program with 3 main funders in it. So you would have program A, and underneath that, if you have to specifically identify expenses for those funders, you could have those as subclasses. But both of those, if you have those set up, that overlaps with how you're budgeting. So you want to keep things as integrated as possible. There are lots of options other than spreadsheets to track your restrictions. So reach out to us if you have questions. Jackie and I both have a lot of ideas. And yeah, we'll do those for now, so we can hit our next few slides.
Yep, so we've got 90%.
Right. And here are the results.
Well, apparently the people who had the board and managers help, maybe they don't have enough input, but it's looking like not enough input, lack of quality data, and limited tools. And that I can see that is a main struggle, and that's what we help with often. Again, we are plumbers and can help find a way for everything to work. You know, each nonprofit is super unique. So that's why it's fun. It's unique. You're unique. You have different missions, and we can help get all your accounting stuff to support it. Okay, Natalie, I think it's you.
All right. We are going to jump into analytics and KPIs next. I spend a lot of my time doing this part and developing dashboards and things like that. And when I do present to boards, I really like to use KPIs and graphics instead of the financial statements themselves. I'm a super visual person, but I also find that it helps boards a lot because I have quite a few who have made comments to me like, I don't even know what a balance sheet is. Can you just explain that first? And if we're talking about specific KPIs, that can help a little bit. So what is a KPI? It's a measurable value that demonstrates how effectively a company is achieving key business objectives. So they really need to align with your overall mission and goals. So we should be thinking about things like, where have we been? How have we been performing? What do we need to do? Where do we want to go? And I think it's also really important to think about these in terms of your key stakeholders and what they really need to know. So what do your department heads need? Your executive director may need their own set of KPIs that they're going to track. What do the board members keep asking questions about that we need to have ready to go? And then just as importantly, what are our grantors and donors looking at? So we're going to dive into a whole lot of examples. So I'm going to throw a lot of information at you, and we'll kind of just go through what each of these mean. I do want to say that it's important to note that you probably should not track every single one of these. That might be a little bit too much. Maybe you want to aim for about 10 of your key performance indicators to track on a regular basis. So the first one is going to be your donation growth rate. And this is calculated by your current year donations minus your prior year donations divided by your prior year donations. So we're trying to see what is the increase in our decrease in our donation revenue year over year. You could also do this month to month if you have monthly goals. I really like to do this on a rolling 12-month basis. So a lot of you probably have fundraising events or different peaks and valleys in your revenue year over year. So I would do a rolling 12-month, looking at the 12 months prior to that as well. And I would also really encourage you to compare this against your budget. What did you budget for your donation growth rate, and what is your rate actually turning out to be? And put those on a graphic against each other so you can see where you're stacking up. The next one I'm going to talk about is your net fundraising and public support. This one is super, super easy. It's just your fundraising revenue and public support less your direct fundraising costs. So what's your net fundraising essentially? But then kind of piggybacking on that, we can expand into looking at your fundraising return on investment. So this is really trying to figure out what that return on investment is. And we'll run through one really quick example. Let's say that you had a fundraiser that earned $500,000, but it cost you $100,000 to put that event on. That would be a 400% return on investment, because you're going to take that net $400,000 divided by your cost and figure out what percentage that is. I would recommend that you consider using this to determine success in different fundraising segments. You know, you should definitely know what this is for your organization as a whole, but we can be realistic in knowing that fundraising events might have a higher cost per dollar than your grant making group. So think about those to determine your success and your change from the prior year for your fundraising events, your ad campaigns, and so on. Grants secured is just that, just your total grant dollars. Definitely track this against your budget. Consider breaking it out by type of grant, if it's a foundation or a government grant. And definitely put this on a visual. And when you do put it on a visual, I would use year to date. So the timing of grants can be tricky, right? Maybe we received it in October last year, but we're not going to get it until December this year. So track that on a year-to-date basis so you can see where you're tracking, where you're headed against your budget for the entire year. I'm actually going to skip that one for now. So administrative and program efficiency, we're going to get into this in a lot more detail later on. But what you're trying to figure out is, of my total expenses, how much was related to my administrative overhead? And then on the flip side, how much was going directly into our programs as a percentage? But like I said, lots more coming on that one. Days cash on hand is one of my favorites. And this tells us how many days of expenses could you cover if you didn't receive any additional revenue? How long could you survive as an organization, essentially? Benchmarking this is really hard. It really depends on the type of nonprofit that you are. And you need to think about how reliable are your revenue streams? How frequently do you collect money? Are you seeing any significant trends, either in growth or decline? And it's just calculated as cash divided by your daily expenses. Definitely carve out if you have significant in-kind expenses, we wouldn't have to pay for those, so carve those out as well. I'll pop a couple more. This calculation actually should go to the line below it for the quick ratio, current assets divided by current liabilities. It's a liquidity measure. It's pretty standard across all industries. And then the debt ratio is just taking your total debt divided by your assets. So we're gonna jump to the next section. The question that I get from a lot of my clients is, where should we be? You know, we have all of these ratios, but what should they be to go forward? And so what I did is I went out on Charity Navigator's website. Charity Navigator analyzes nonprofits. They have a full website. It's free to the public and free to the organizations that would like a rating. But they actually score nonprofits based on a whole lot of factors. So I looked this morning. I live in Nebraska, so I looked at Nebraska specifically, and they had over 15,000 charities on their website. They don't rank all of them. You have to say that you would like them to analyze you. But there are 646 in Nebraska alone who have the top tier of rankings. They don't charge for these ratings, and they look at a whole lot of things: impact and results, accountability and finance, culture and community, and leadership and adaptability. We're going to look just at the finance piece today, and we'll look at the financial metrics. So I've got a list here on the slide for you. We're going to keep expanding as we go through the next few slides, so don't worry about wondering what these are. But I did want to just explain that they're looking at some history, right? They're not just going to look at the 1 year other than the liabilities and assets. Everything else, they're looking at your last 3 or 4 fiscal years. So if you would like them to rate you, know that they're going to look back for a little while, and they're going to use the year 990s to do it. This is going to be super small print, so I apologize for that. But what I love about it is that they actually give you the exact formula for what they are rating and how they're going to do it. And in a couple of slides, I have a link for you, but they even convert these into which lines and boxes they're using from your 990. So you can go out and you can know exactly what they're going to look at and how they're going to calculate it. So let's just run through each of these really quickly. For program expense, this is telling you of every dollar you raise, how much is going to go directly into your mission and your purpose. So it's your average program expenses divided by your average total expenses. And remember, we're looking at a 3-year span here. So they're going to do the average of both of those over those 3 years. Liabilities to assets is exactly what it sounds like. Liabilities divided by your assets. And this is telling us how much of your assets are already spoken for. The administrative expense ratio we just talked about on the last, well, 2 slides ago, but what percentage of your expenses is spent on administrative overhead? Fundraising is the same thing, only we're looking at fundraising expenses. I really like the fundraising efficiency ratio, because now we're flipping it to what percentage of your fundraising revenue is being spent on raising those funds. And I thought the program expense ratio growth one was interesting. That formula is really complicated, but essentially what it's telling us is it's wanting to see a growth in your programs from year to year. Okay. And I'm seeing an FYI here that they just hosted a webinar yesterday and that they're changing some of these calculations. I got this off their website last week, so we'll keep you posted on what's going to change. But this is what it was last week. So thank you for the update. Okay, working capital ratio is going to take your working capital, which is just your net current assets and liabilities, divided by your total average expenses. This is a very similar concept to your days cash on hand. How long could you last as an organization if you had nothing else come in? But this one is looking at your working capital instead of your just cash. And I know I'm going fast. There's a lot here. I'm not going to go into these in detail, but this was giving the metrics a score from Charity Navigator. So let's say that you start tracking all of these things. What should you be benchmarking against? So the very left column is the top tier that they would give you. And so if we just look at the administrative expense percentage, if you're spending less than 15% of your expenses on your general and administrative overhead, you're going to get that top score. So what I would recommend is that you start tracking yourself against that level right there. This is just for basic nonprofit organizations. They do have specific tiers and different rankings for different types of nonprofits, such as food banks, grant-making organizations, museums, foundations, etc. And that website right there is where their current ratings and methodologies are. There's a full Google document that takes you through the whole thing. As far as how do you track these things, we're going to get into benchmarking in just a minute. But what I think is super important is that all of these, as you could see, so many of them depended on how you're allocating your expenses, right? Your admin percentage, your fundraising percentage, your program expense growth. And if you're not doing those things right, you're not going to be able to meet those metrics appropriately. So we did want to touch just on how do you allocate your expenses. The program expense is the activities that go directly into your mission and purpose, the programs. Management in general are the supporting activities. What are the things that you have to function as an organization, but it's not a direct benefit to your beneficiaries. Usually, personnel-wise, that's going to be your CEO and your executive director. Maybe some like admin assistants and things like that, those types of office people, maybe HR. Fundraising, I think, is pretty clear. How did you raise that money? To determine that, you're either going to have direct costs, and those are going to be easily identified to your program. So for example, if you are a food bank, the food that you purchase is going to be a great example. The indirect costs are a little bit harder. Maybe there's a cost that benefits multiple functions. Payroll is a great example. That executive director may actually go into the food bank every once in a while, and they spend a day in there every day sorting through the shelves. So now they've got direct program and they've got administrative, and we need to be able to do some allocations there. I think it's important to note that it's very important to do these things as they happen during the fiscal year. Don't just wait until the end, because if you have some significant swings, that it's kind of too late, right? You might not be able to get those percentages where you want them to be on your 990. So a little bit more detail on, okay, now how do you do this? Payroll, you can use payroll to allocate other costs as well. So for example, maybe you have a Microsoft subscription, or you're just going to allocate your general IT costs. You can use your number of employees spread across those functional classifications or actual payroll costs to do that. So that's a really good option. Time and effort is where we're actually looking at where are people spending their time and allocating things like that. So we would use this for payroll a lot. You can do time studies to document how people are actually allocated between the programs, or you can actually have people track their time. I have some clients who use a free tool called Clockify, and every day they're assigning how much they spent in program A, how much they spent in program B. That can feed directly into your payroll system. That one is obviously best practice, right? We have a live view of where people spent their time. It's really great for accountability. If you have government grants, I strongly recommend that you use that version. And the last one that we'll touch on is just going to be square footage. That's a great option for utilities, maintenance, things like that. If program A takes up 80% of your space and management in general takes 10 and fundraising is 10, that's how you would allocate those things out. Okay, then we have non-financial KPIs. And this is where we can start identifying some of those key drivers that you can use in your budgeting process. So we can look at donor growth, donor retention, just like Jackie mentioned. It's really interesting to start looking at your web page and how many clicks actually resulted in a donation. So we've got some formulas there for you. And I'm gonna flip back just a second. Then we've got number of patrons served. Jackie's got a great dashboard for one of her clients where we're tracking new clients, existing clients, all types of things like that. And then those can get integrated with your financial data. So how much does it cost to serve each client? If we want to reach 100,000 more people, what do we think our costs are going to happen with that too? So we're going to flip to a specific example from Jackie and one of her clients.
Yeah, so these are mission-focused KPIs, and this is from the Global Foundation for Peroxisomal Disorders. So they have 3 different programs: research, advocacy and outreach, and family support. And so they track these mission-focused KPIs for each one. You know, did they design a physician mentorship program? So all of these touch points for advocacy. And so they track those monthly, and then we can tie some of those, not always, into the financials, but it's just an idea of, you know, thinking outside of the box of just financials on what you're tracking and focusing on, that this is more mission focused. So just some ideas.
Okay. We have just a couple of minutes left, but I do see a bunch of questions asking, what do you recommend to track these things? Like I said, definitely there's some already incorporated in your financial softwares, likely. I know QBO has some. They're not super tailored. You can use Excel. You can have, you know, charts that auto-populate. We're using a tool called Giraffe to do this. So if that's something you're interested in, we can definitely get you some additional information. Oops. I think I lost my slide. Oh yeah, so this is what a dashboard could look like for Giraffe. And we're able to overlay those goals so you can kind of see where you're going and where you're tracking against those. So when you get these slides, we've got some other examples of some dashboards as well. But I think once you narrow down those top 10 KPIs that you're interested in, definitely set something up using Fathom, Giraffe, Excel, whatever that might be, and track those monthly so you know where you're at.
Natalie, can I jump in real quick? Was it
Yeah.
Clockify that you said? Was that platform?
Yes.
Okay, Clockify.
Yeah, my client's using the free version, but they're tracking their time. But you also, like if you're on Gusto, you can actually use that to track by program or department as well. So lots of options.
One more polling question. Get it in there, guys. And then while you're answering that, there was a comment about, you know, what's the definition between program management, general, and fundraising? So program is going to be, when we're talking about functional expenses, program is going to be your kind of your mission focused areas. That in that example for the GFPD, it was research, advocacy, family support. So that's program. General management in general, that's just going to be your supporting functions, and fundraising, that's going to be like grant writing, development, and all of your events. It's trying to get that in, and it's 12 o'clock. We've got 48, 51.
Okay. And I will now jump to the very last polling question for everyone who needs that last one.
I love this. We had so many great questions on the Q&A, but you know.
The questions that you did not get to, if there's any in there that you did not get to, oh, looks like you did knock out all of them. Okay.
I was working on that. For the most part, I got most of them.
Our email addresses are in the slide deck though, so any further questions, definitely reach out. We could talk about this stuff all day, as you can tell. So happy to connect.
Thank you so much. Thank you to all of our participants who joined us today, and thank you to our awesome presenters who gave us a great webinar. I want to thank everyone for joining us and have a great day. Thank you, everyone. Bye.
Bye.